When we look at the outlook for the economy, there's been some optimism because the labor market's been so strong that the Fed can orchestrate this perfect soft landing. And we still have skepticism around this theory for several reasons. First of all, in this chart, you can see that the recession odds have been pushed out. Coming into this year, the expectation was for economic growth to decline in the second quarter and third quarter before modestly accelerating in the fourth quarter. What you can see now is that the expectation for negative growth is being pushed out into the second half of this year. There's several things that we still think are a challenge for the economy that haven't been cleared up. First of all, the yield curve is deeply inverted, and there's never been any instance in history, except once, where the yield curve was inverted like this, and that's the difference between the 10-year yield and the Fed funds, and it didn't lead to a recession. The other thing that we're really concerned about is the consumer. The consumer has been relying significantly on credit card debt, and you can see in this chart that they're growing credit card debt at a double-digit pace, but at the same time, the credit card rates are at a record high now. This is causing the consumers now are getting so squeezed by high prices and the slowing economy that they're relying on debt, and that is not sustainable. The first half of this year, we saw the banking crisis in the first quarter. This has led to tighter lending conditions from the banks. This is not good for growth. In every instance that we've seen tighter lending conditions from banks, it's led to higher unemployment as well as is typically preceded a recession. Some of these things, along with the slowing economic growth we're seeing internationally, Germany's in a recession, China's reopening has been disappointing. These are some of the factors that concern us about the economic outlook in the second half of this year. We're not ready to say that the economy is going to be able to avoid a recession. In fact, all of these factors just reiterate our view that this is still a possibility.